So in this video, we're going to talk about everything that you need to know regarding the ascending broadening wedge pattern, and I'm going to show you how you can detect this pattern on your charts and how you can trade this in your trading strategies. And also I'm going to show you an example on the charts so that you'll be able to understand and trade this pattern successfully. Hey guys, welcome back. So I hope you guys have been having a great day. And today we're going to talk about the ascending broadening wedge pattern. This is a very good pattern that you can use in your trading strategies, and also you can use this pattern in order to predict if the market is going to be reversed, okay, if the current trend is going to get reversed. Okay, so first of all, we're going to learn how you can detect this pattern on your charts. In order to do that, let's go towards the computer, and here you can see that the market structure of the ascending broadening wedge pattern looks like this. Here you can see the clear formation of these higher highs and these higher lows. In this pattern, or in this market structure, one thing is very prominent, that is that every next wave is bigger than the previous wave. As you can see here, the market is moving in the bullish trend, and in this bullish trend, every next wave is bigger than this previous wave. This is the first wave, this is the second wave, which is bigger than this previous wave, and then this is the third and fourth wave, which are also bigger than the previous waves. So we would call, if we join a line of these higher highs and these higher lows, the upper line would be called as upper trend line, and we would call this the lower trend line of our ascending broadening wedge. And we call this a wedge pattern because it makes a shape that looks like wedge. So once you have detected this market structure on your charts, then you have successfully detected our ascending broadening wedge pattern. Now let's talk about how you can trade this pattern. So once the ascending broadening wedge pattern gives a breakout at this lower trend line, then that means now it's ready, or the market is ready to get reversed. Now the bullish trend is gonna get reversed, and the bearish trend is going to form in the market. So here you can see that this is the breakout candle, and in this case here you can also look for a candlestick pattern that should be forming at this higher lows trend line or lower trend line. And if you successfully detect any candlestick pattern that indicates now the bullish trend is going to get started, okay, that would be a very good indication that now the market trend is going to be successfully reversed. So here you can see that this is the candle or the breakout candle, and after that the market moves in the bearish direction. So here, once the market breaks this trend line, that indicates that the now trend is gonna get reversed, and your expected target would be the origin of this ascending broadening wedge pattern. So once this breakout happens, you should be targeting this lower or this origin of the ascending broadening wedge pattern, and your stop loss can be any key level that you detect. Like here, if you spot a resistance, or if you spot any supply zone in the past, that can act as a very good confluence. And we also have a supply demand indicator which you can use on your charts in order to predict the supply and demand zones and draw the supply and demand zones in real time. If you're interested, please check out the links in the description. And here you can look for any confluence, and after finding that confluence, you should be good to trade this ascending broadening wedge pattern. So your stop loss would be any candlestick pattern according to any candlestick pattern or any key level that you detect. So this is how you can detect and how you can trade this ascending broadening wedge pattern. Now let me just go towards the chart and show you how you can detect this on real-time charts. And let me just go upward, and let me just zoom out a little bit. So here you can see that there is an ascending broadening wedge pattern forming here, because here you can see the clear formation of these higher highs and these lower highs. And one thing you can notice here, that every next wave is bigger than the previous wave. So this is a valid ascending broadening wedge pattern. Here you can see a little bit movement of the market above the upper trend line, but it's very hard to find the situation where market will be following this pattern in exact order. Okay, so there are some approximations that you need to consider, and here you can see that every next wave is bigger than the previous wave. So this is a valid wedge pattern, and here you can see the breakout happened, and here you can see the breakout happened. So after the breakout of this lower trend line, the market moved in the bearish direction, and the origin of our ascending broadening wedge pattern was this. So market came back to this level. The one thing that I don't very much like about this ascending broadening wedge pattern, that it gives us very small risk to reward ratios, okay? But you can definitely use this in situations where you can get a lot of profit as well, okay? If you combine it with any other strategy or any other confluence that you can use, then this can act as a very good trading setup as well. So in this case here, our stop loss can be anything, anywhere at this key level, if you detect any key level in the past, okay? And the high of that key level can act as your stop loss, and this will also act as your entry. And after that, you can see the market gave the bearish trend movement. So let me just repeat what we have discussed in this video so far. First of all, we looked at the market structure, or how you can detect the ascending broadening wedge pattern on your charts. And for that, what you do is you need to look for the continuous formation of these higher highs and higher lows, and every next wave should be bigger than the previous wave. This the line joining these higher highs would be called as upper trend line, and the line joining the lower lows, higher lows, will be called as lower trend line. And once the market breaks this trend line, then after that, it means now the trend is ready to get reversed from bullish to bearish. So after the trend line breakout, you should be targeting the start or the beginning of this wedge pattern, because that will act as your expected take profit level, okay? And in order to trade this pattern successfully, you can use different types of confluences, and that confluence can be any key level or any supply zone that you can detect in your past. So I hope you guys like this video. If you have any questions, please comment down below and I would love to answer them. Also, don't forget to visit our website www.forex.co, and don't forget to like and subscribe to our channel so that you'll be the first one to know whenever we upload new content. See you guys in the next video. Thank you.